Government guaranteed mortgages just got more expensive. That's because the Federal Housing Authority is raising insurance rates and tightening credit score rules. Bloomberg's Don Kopecki is in Washington tracking this story for us. And Don, bring us the latest, the FHA worries, if you will.
Well, analysts say that this is the first time that public policy is actually reflecting market reality. All borrowers are going to have to pay an extra 0.5 percentage point up front to get guaranteed, federally guaranteed mortgages. And borrowers with really weak credit scores under 580, are going to have to put 10% down as opposed to 3.5% down. There are a few other things that FHA is doing to tighten credit standards right now to basically save the agency from needing taxpayer money in the future.
Don, we know that anyone who's trying to buy a home right now still has to meet pretty strict requirements because the banks are being cautious with their lending. Does this just step that up even further then?
Well, FHA was kind of the lender of last resort. If you couldn't get a loan with your bank, chances are you could get an FHA loan. So this is really going to impact the people with the weakest credit histories, the people who are kind of on the fringe, and even, you know, a lot of regular everyday Americans who just didn't have, you know, $100,000 in liquid equity in the bank to get a loan.
Right.
So this is going to affect a lot of people. FHA accounted for 1/3 of all home purchase loans last year. So this is a big segment of the market.
And this at a time when we're hearing some data today, for example, on housing starts, new homes, that was below what the street was looking for. Is there the risk that these types of rules or changes to the rules all of a sudden sidelines what's been going on, any of the encouraging signs in the housing market?
Well, a lot of people think that the encouraging signs in the housing market are nothing more than red herrings, that the housing market is actually headed for a double dip. And all the policies that Obama is putting forth, it's having a little bit of a dent. None of it is turning anything around. So economists believe that a lot of these price disruptions have to happen for the market to ultimately right itself. So yeah, it might affect things. It might make it harder for people to buy houses, but a lot of analysts believe that that's just part of what needs to happen for the U.S. economy to ultimately heal itself.
All right, Don, great reporting. Don Kopecki joining us from Washington.